Welcome, everyone. Markets have opened in Asia this morning, a little bit sideways after a good rally yesterday. Let's kick off with regular Thursday commentator Dr. Carole Nakhle, CEO of Crystol Energy, sitting in Germany. Carole, the market seems to have found a direction, and all things seem to be the upward motion of the U.S. economy and the U.S. outlook pulling the world forward.
Good morning, Sean. Good morning, everyone. I mean, today I feel like it's a sunny day because not just for, where I am in Germany, but overall, when you look at the market sentiment, you feel lots of optimism going forward. And we saw that with oil prices yesterday, though it was an immediate reaction to some purely oil-related data, whether the IEA upgrading their forecast for oil demand, and the same thing a day before, both the EIA and OPEC did the same. So we have kind of consensus among major market forecasters that there is an uptick in oil demand for the rest of the year, especially with the summer season. At the same time, we had drawdowns in inventories in the US, and of course, the economic data from the US. But all these news, mainly for economic outlook, they seem to be so far concentrated in one main area, that is the US, but quite rightly so, because the US is the largest economy in the world, and it can have spillovers to many of its trading partners, and then hopefully for the rest of the world. So definitely things are kicking off positively in the US, and this is mainly driven by the speed at which the rollout of vaccination has been carried. Now, I must have to say it is quite impressive. I mean, I don't think many people expected that to happen in the US at this speed, but the problem remains elsewhere. So we go back to this issue of uneven economic growth because of the uneven distribution of the vaccination. Hopefully that will be adjusted. I mean, here in Europe, they seem to be finally getting their act together, and the rollout of vaccination is picking up in Germany, in France, elsewhere, but it's not right at the same speed as what we saw, for example, right next door in the UK, and of course in the US and elsewhere. So overall, yes, optimism, and it's quite rightly so, because we had really some tough months and year last year, but we have to bring back that horrible word that you see it in every single forecast, that is cautious. So we have to remain cautious for the coming months, because again, the pandemic is not quite under control.
Let's welcome to the table for the first time Jorge Montepeque, President of General Index, formerly known, I'm sure, to many as one of the founders of the Platts window and other distinguished achievements on the benchmark side. Jorge, we're seeing this week, again, the continuing trend. Yesterday, the EIA confirmed a bigger than expected draw on US inventories. This market was apparently stuck, but now has momentum again, it would appear.
Well, I think all the forecasts and data is always trailing reality by definition. The data is always retrospective, right? It's a confirmation of something that you already should have known. And if we take a higher level point of view on how we see the market, demand is strong. Economies are coming back. There are areas that are a bit weak, and Carole really gave a very good summary of where the economies are and pointed to Europe being essentially the sick man in all these areas, right? But China is doing remarkably well. We will have economic data tomorrow from China, and I really want us as the talking group here and the audience to really look at that number, because it could blow our socks off. So it's not really the US, it's China, because we could see numbers year-on-year GDP jumps of maybe over 15%. That big, right? Because China was the first country to lock down last year, and they are having a very, in a way, unique approach of controlling the pandemic by tightening their borders and cross-contamination. UK and the US, they're fighting it off via vaccine. and Europe is the sick man in that relationship, right? But at the end of the day, China is consuming a lot of energy. The US is consuming a lot of energy. The emerging world has major issues with the pandemic, but at the same time, they get on with life, right? Look at India. India's demand is going up even though they are facing a lot of issues. So the data that we get, which is always late and always behind, will show that demand is up. So this year in 2021, we should not be surprised that we are going to be very close to the levels we saw pre-pandemic, 2019. So the horrible period all the companies went through, that suffered with, many of them died, of course, or had brushes with death, is behind us. It's totally behind us. And we need to be facing a new normal. The new normal is major drawdowns in inventories. We have now had backwardated markets, which give us that signal that inventories are being drawn down for over 3 months. And that backwardation has steepened significantly, and so it should. And as we come out of the turnaround season, which is right now, and it was very big in China and in Europe and in various places, demand is going to surge again. Sorry for taking too much time, but I just want to share that I am sharing.
Vladimir stayed in bed, so the window is a little bit larger this morning.
Yeah.
In fairness, it is early in London. We'll forgive him.
Okay. Yeah. There is a little bit of a time disconnect because at some point I thought it was 8:30 your time. So we'll give him that. But what I wanted to say is really the demand is back. OPEC has done a tremendous job in herding stray cats and reducing supply at a time that demand is actually exceeding what the chattering classes say demand should be. So the market is reacting by drawing inventories, by lifting the price up. And as we come out of this turnaround season, I think between now, and this is the discussion I was having with some friends yesterday, between now and mid-May, we're going to see a line up in the flat price, where it wouldn't surprise me if we test again $70, because all the refineries will need to go into a purchasing mode to replenish their inventories. Nobody wants to have excess inventories because the markets are backwardated. So they will wait for the last minute, and we are going to see that purchasing surge between now and mid-May.
Carole, in that predicament, I mean, in that sort of fairly glass half, very full diagnosis that both of you have given this morning, we have the reality of Vladimir waking up sideways.
But he's upside down, Vladimir.
But Carole, the with those scale of growth figures, if indeed we did get a number like that out of China, 15%, even anything double digit would be massive. Inevitably, inflation has to be coming in the full headlines quicker maybe than currently is being pushed away by monetary policymakers.
Look, I mean, when we talk about all these impressive numbers, of course, if you just take them on their own, they look great. But you have to remember, we're starting from a very low base. So anytime you are growing from a very low base, any growth will look quite interesting. So we have to remember that. And then second, we have to bring in the different time frames into perspective. Are we talking about the next month? Are we talking about at the end of the year? Are we talking about the next few years? Because that exposes us to different outlook, different scenarios. And this is where I think the more we look into the longer term, where we have perhaps the inflation risk and other scars from the pandemic might re-emerge in terms of causing troubles and slow down economic growth. But definitely inflation seems to be still on the mind of many market observers. So at the moment, this seems to be tamed down compared to what we heard, for example, last month. But I wouldn't be surprised to see the conversation brought back to the picture, and then people concerned about the impact on future economic growth. But I would add two more dimensions to that. One directly related to inflation, that is the cost inflation. So if you are in the oil and gas business, you must be familiar with this kind of correlation between oil prices and cost trends. So high oil prices do not necessarily lead to always great outcome for oil companies. And there is the other usually overlooked aspect, that is it attracts the taxman. And in today, the risk is much higher than before, because governments will be looking for ways to refund, or generate more income for all the money that they spent during the pandemic. And who they are going to target, they usually target the oil companies, because they don't expect much opposition from the general public if you punish those dirty polluters. So on balance, you have to think about the risks in the future for the oil and gas sector, because high oil prices do not necessarily always mean good news for the industry.
Vladimir Langhamer, good morning, Managing Director, Supply and Trading at OMV, sitting in London. Vladimir, good morning. We've seen oil prices earlier in the weeks sort of generally stuck in the low 60s. We've broken higher now on the back of, it seems, momentum from inventory draws. Your thoughts on the movement in the market over the last few sessions, and will it continue?
Hi, good morning. And sorry for being late, but completely kind of from internet, which is the new oil, and when it doesn't flow, it doesn't work.
Exactly. You can send Boris Johnson a message.
I think my thought is following. I think it's a bit sentiment driven. I also think the kind of the decline from the 70s to the 60s. Yes, it was on the back of some news, but it was kind of a flush out of the market. And equally, I believe in the last week, the market has kind of returned to some kind of a confidence, and that's why it's actually growing. I mean, if you compare, what are the news or what are the fundamental changes, I think they're not so substantial to justify kind of growth from the low 60s to 65 and beyond. I think people are still looking at the same elements, and there are so many elements out there that you need to take into consideration. But I think, by all means, if you look at the balances, it's still a draw despite the relatively surprising decision of OPEC a couple of days ago. And I think people are taking that into consideration.
Do you think, Vladimir, we have any support to this price from what appear to be growing significant geopolitical tensions in eastern Ukraine? We have a very serious incident building, and also in the Taiwan Straits, we saw the biggest incursion of Chinese military jets into Taiwan airspace this week. These two theaters seem to be hotting up a little bit.
Yeah, but to be honest, I mean, from discussing it with other participants on the market, they are not yet a price driver.
No.
I mean, you could equally put into the mix the issues around Iran, and they're trying to on one side restart, but there was this incident. The question is who was behind. I think to a large degree, none of those are really new. Maybe the Ukraine is something that heated up. It wasn't there for a couple of days, but a couple of years, sorry. But I don't think the market is pricing it in.
I think
yet.
what might be new, and this is purely reading the tea leaves on my part, is China and Russia coordinating on a global geopolitical scale to tackle American hegemony and the new US president. That, if this indeed is a coordinated moment, would be worth paying attention to. But Jorge, back to your very optimistic outlook. Given that prediction, surely OPEC should be opening the taps for a summer in which, hell, you might have queues at gas stations by the sounds of things that you're describing.
Well, if we look back a little bit, just a little bit, like 3 months, we have been consuming inventories at a rate that exceeds 2 million barrels a day. Maybe 2.5 or 3. Nobody knows, right? But it's somewhere in that vicinity. And OPEC and Saudi Arabia decided to increase production in a way, not surprisingly, perhaps in a step, but it's still increasing production less than, in my opinion, will do to balance the market. So some people say they should increase production more. And maybe I agree with them. But their goal is not to match demand. Their goal is to drive inventories to normal historical levels.
And but surely they're on track to now even go well below that, perhaps by the fourth quarter.
Yes. And once they reach that level, then supply will match demand and Saudi Arabia will go back to normal. And let's not forget that Iran is coming in terms of production. So things are really fairly on track to have a very tight summer in terms of supply, but more of a normal market towards the end of the year. But that doesn't mean low prices, because let's not forget that the US production has already seen, is in the past, the peak level. Right now, the US is shrinking and will continue not to reach the level that it was because the bankers are pulling away from these markets and the level of investment hasn't come in. So production from historical areas is on a downtrend. So I am extremely optimistic about the oil world that is going to remain very tight through the summer and perhaps not so tight in the winter, but it's tight still. So that will continue to create a positive momentum in prices.
Carole, given your thoughts on the sort of European efforts on the vaccine rollout, getting up to speed, so to speak, and we've seen data emerging that commercial flights across the world, and particularly in the US and China, are getting back and closer to 2019 levels. Do you expect that there will indeed be a summer travel holiday season now in Europe with the acceleration of the vaccine rollout?
Sean, I hope that you have in your question poll today, how many of the participants have booked international flights for the summer? And then that would give us perhaps an idea.
Well, surprise, surprise. Pull up the poll question, Irene. Not that this was stage managed.
Oh my God, don't tell me, I got it right.
You got it right. See,
I did not know about it.
We're getting telepathic.
Yeah, so great, but that would be interesting because I'm getting really mixed signals. I mean, definitely there is a pickup in domestic flights in the US and in China, but still there are still question marks about international flights. And one of the reasons being this vaccination passport, that people are thinking about it, but it's raising all sorts of questions, including ethical questions. What do you do with those who cannot get the vaccine, for instance? You cannot tell them you cannot travel. But I want to go back to one question that Jorge discussed, that is the commercial inventories, and that is the main target. But actually, my question, I always had issue with this figure because what is the historically normal target? I mean, you know, OPEC has been using the last 5 years average, but if you look at and that is by itself a moving target because as you progress, that target moves as well. But it also includes a period of very high inventory built up between 2015 and 2017. So that's a bit distorting the picture in terms of making the market tight. But on balance, yes, I agree that we are looking into a better summer season this year. But I remain cautious because of this uneven distribution. And where are you going to book your flights to? What happens if you go to countries where the vaccines has not been distributed properly? What will you do when you go back to your home country? Do you have to quarantine? So all these remain up in the air, and many people are still raising those questions before, and they don't have firm answers before booking their flights. But I want to take this poll that you just put on the screen and say, if I cannot book my flight to London to go back to my home, then
well, there might be nicer places to go this summer than London. But Vladimir, given the sort of outlook for the demand picture that we're articulating here this morning, that of course creates opportunities for more supply to come onto the market. And so the exit from this very strict managed supply market, right? This market sits still on 8 million barrels of idle capacity. Coming out of this forest, if you like, as I describe it, it could get a bit chaotic supply-wise.
Yes,
Shale,
well, you know,
more from Libya, more from Iran.
Nothing. I would say on the crude side, I think it's going to be more coordinated. I mean, yes, there are a couple of, you know, let's say vectors that could come on. I think the biggest one is really Iran. I mean, you know, Libya is kind of on the capacity. Yes, you can add here maybe 100, maybe 200. But I mean,
is there any vulnerability in Libya? Vulnerability on the downside?
I mean, again, you know, for the next coming weeks or months, I don't really see that. I mean, you had the new government. I think things are actually heading quite well. You know, there were absolutely no issues whatsoever. They are steadily increasing the capacity. I mean, they very fast, you know, ramped up to where I would say the technical maximum is with given the infrastructure, and now they're improving the infrastructure. So I think the only biggest vector is Iran that could come on with the decision. I mean, US is still a question. Jorge has mentioned that. So I think that's going to be much more coordinated. Where it might be chaotic is on the product side. Because I think what you're speaking of, you know, there's a lot of idle refining capacity, and obviously the refiners, having suffered, you know, quite low margins, are kind of on the trigger to start producing more, because, you know, despite the fact that the margins have improved in the last couple of weeks, you know, not many refiners have really increased their runs because there was not the demand. In other words, the refining system globally has managed to balance the runs with the demand. Now, in any indication, if there would be any substantial increase, I am still a little bit kind of not pessimistic, but let's say realistic about the demand increase, which is going to be gradual. And, you know, talking about flights, yes, you might have people flying internationally, but, you know, I've spoken with a lot of business partners and over the video, and you know, many of us said, well, in the past we would have flown somewhere and meet together. We're not sure if we actually will do that in the future. Yeah. So I'm still very about the demand for jet, and if jet doesn't return to where it used to be, then we're not going to be to the 100 million barrels anytime soon.
Jorge, the question of the recovery in its coming period, we've got OPEC had added fairly insignificant amounts, at least announced. They haven't even added them yet. Do you think, or would you have any expectation, another meeting only around the corner, that given the forecast you're articulating, that they could actually adjust upwards on those supply numbers for the second quarter?
Well, a couple of things. We don't know what is normal in terms of inventories, as Carole was indicating. But in a way, it doesn't matter what we think. What matters is what Saudi Arabia thinks. And in my discussions with them, they think that inventories are above normal. That means that in their actions, they want to continue to restrict supply until it gets to the level where they think is within normal. So my comment based on your question would be, let's not expect a surge in supplies coming out of Saudi Arabia and the OPEC members. They have taken also a very cautious approach in analyzing the impact of COVID, which in a way hasn't been wrong. They expected Europe to lag and for another wave to come through, which it has. Where I disagree with their thinking is that we have been caged animals for over a year, and we are ready to burst out, regardless of what the data says.
Well, I heard somebody on the radio here locally this morning on that tone saying that she was nearly willing to pay crazy money for a staycation because, you know, she has it in her holiday bank account, so to speak. But I'd like to follow up on that and ask you the question of the challenge. These are unprecedented challenges. We've never had to come out of an 8 million plus idle capacity before. We've never had to come out of, even I think in the Second World War, the scale of monetary policy that we've seen in recent year. I mean, coming on the back of 10 years of quantitative easing, these are unprecedented managed exercises that we have to emerge from in the next 6-12 months, perhaps. Jobs are going to be lost. There's going to be lots of challenges. The inconsistency of that could derail the recovery with inflation and other threats.
All these things are a point of view and opinion.
Yes.
But
it's still fact, though, that these are unprecedented monetary positions and unprecedented oil management supply positions.
But if we look at it from a higher level, we have a managed return of supply by Saudi Arabia in particular. And they're managing it very well, dribbling into the market as the market needs it, and maybe falling a little bit behind. So the price is surging. At the same time, from an economic point of view, central bank type policies, we have an unprecedented feed of money supply into the market, combined with what appears to be a surge in consumption and investment plans by the Biden administration. Those investment plans lead to resource consumption. This is not an issue of oil being bullish. It's an issue about oil, metals, grains, any kind of feedstock being bullish. And yes, I agree with you. This could spark inflation. But will the Biden administration say, inflation is picking up, I'm going to reduce investment? I don't think so.
I'm sure Japan wished they had a bit of inflation over the last 20 years. Let's get the result of the survey for Carole to know if she gets to go on holidays or not. 2-1, still a 1/3, not getting on a plane this summer. That's interesting. Carole, your thoughts on that and the outlook for these trends and managing their way out of the challenge?
Yeah, a couple of things, Sean. First of all, about being caged animals. I fear, like, for instance, that's what I put in the chat room now. We might need some rehabilitation after this long period of being away from people. And I thought
this was your weekly therapy. That's why.
No, seriously, but think about it really. I mean, we had, when the lockdown was eased, we had few people coming to visit us. And at the end of the day, we didn't do much, but we all felt exhausted because we were not used to being around people for a long period of time. No, but more seriously, I want to add to the issue of flying, that in addition to the cost of the ticket itself, you have to add the cost of the PCR test, not only one PCR, but you will have to do 2 PCR. So that's another thing that's going to may act against perhaps a maybe discouraging factor for some people. And again, it increases the issue of inequality. This may not be an issue for people who did not lose their job or have good income, but for others, it will be an issue. And that raises a bigger problem, that is income inequality, that is going to spread further because of COVID. And just to conclude on the point that you raised, Sean, about the monetary policy today, don't forget what we have today did not emerge suddenly. It is on top of a long history of very low interest rate. So it's not just about the problem that COVID has created, but you have a heavy baggage, carried from previous years, and that amplifies the structural problems to deal with in the future.
And everybody and their grandmother has literally put their life savings into Bitcoin at this point. There is another vulnerability that could be, I think a lot of recently Dutch tulips come to mind quite often. And what the consequence of that is. Are we on the step of 1929 or is it 1920 with the roaring 20s ahead of us? Vladimir, I'd like to give you the last word with this survey question, a second survey question today to leave us all for the Middle East weekend to think about. Iran-US talks restart today in Vienna. Deal or no deal? What's the view of this room? Deal or no deal on the Iran talks? And Vladimir, your thoughts on what the difference would be in either case with regards to the oil markets?
Yeah, let's see what the survey says. I think if there is a deal, it's not going to be immediate. We already have substantially, people are talking 700 to 1 million barrels that actually come out one way or the other out of Iran. So, how much more is there actually to be exported on a sustainable basis? Yes, there's a lot of floating around, but once that's depleted, how much more is there? So, on the top, I think Iran was somewhere like 2.5, 2.4, 2.5
People are
million
asking
or something
deal
like
or no.
that.
Sorry, Vladimir, to interrupt you. The question of time frame. Deal or no deal from Vienna this week? Go ahead, Vladimir.
Yeah. So I think there will be a deal. Will be there a deal this week? No. It's going to take much longer. But from my point of view, both sides have more to lose from a no deal than from a deal. And that means for the oil market, there's going to be more oil. But the question is when and under what circumstances. If that's going to be in, let's say very soon, yes, that will have an implication. If that's going to be within, let's say, a year, I think that's going to be much easier to digest than now.
Let's bring up the survey results as we wrap up this morning. I think the deal 53%, no deal 47%. I think deal or no deal is obviously a bit dramatic, but ultimately the sentiment of whether they come out of Vienna with pointing towards a deal versus pointing towards a breakdown. I think the biggest data point that one might take into the end of the Middle East week and anybody's weekend, Iran refining uranium at 60%. 60% refining of uranium. That's a pretty sobering number if you're involved at all in the parameters of this geopolitical situation and the talks. I think there is an urgency around this. I don't think there's time for what was previously 3 or 4 years of posturing that went into the JCPOA at the beginning. Now to get it back up and running, I think it's going to be, there is a tight window ahead of the Iranian elections in June when everything else could change. So that's my penny's worth on it. But listen, Vladimir, thank you very much for getting Huawei 5.0 to get you connected this morning. Oh no, they didn't. They're not allowed in the UK. Jorge, thank you so much for joining us, and certainly the first of many. And Dr. Carole will be getting you on that flight to London. Swim, that's the way to do it. Get a little boat and go across the North Sea. Row your boat across the lovely North Sea. There is a tunnel as well. You could take a little train. Anyway, thanks everybody. Have a great weekend, and we'll catch up with you next week. All the best.
Thank you very much.